Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on the tech sector, XLK, Apple, and Facebook daily, weekly. So we did get a bull break of this pattern, the equilibrium pattern, higher low, lower high, bull break only by a couple pennies at this point. It's not convincing, but we did close at the high of the day, and we have potential for further upside tomorrow. So if we can get over this middle Bollinger Band on the daily, which is going to be at about 56.18 or so tomorrow, we have a lot of space to the upside. Because of the all-out dump, a lot of resistance was not established on the way down, so we are going to see an easy route on the way back up, in my opinion, with 57.39 being a key resistance that the bulls need to get to. That's the all-time high. So a really good job of the bulls establishing support, taking it nice and easy, contained consolidation, and looking for follow-through back to the upside. Weekly time frame for XLK closed right on the exponential support. The bulls are saving it with this week and looking to follow through back up towards that all-time high, trying to fend off the bearish MACD cross as well. Apple has been one of the weakest tech names. It played catch-up a bit today. Really solid candlestick, but we still have exponential resistance. We still have the lower high pattern intact. We have to break 147.50, and then we have the 50-day moving average resistance and the middle Bollinger Band resistances to deal with after that. So you can see the positioning of the sector as a whole, much less resistance in terms of moving averages compared to Apple because of how much more significant we pulled back. Weekly time frame is defending the middle Bollinger Band support, but we have to get over weekly exponential resistances as well for the bulls to prove they have regained their strength. And those levels are in the mid-147s. So we have to close back above that level in order to be looking back towards the highs. And as of right now, so far so good, off to a great start for Apple. Facebook, there's that continuation. So this is why I'm talking about Facebook as the lead bull. We have all moving averages as support. We have broken the lower high pattern very clearly and significantly. And after 153.57, we're looking at the all-time high of 155.59. So just the positioning on the daily time frame compared to Apple, higher low is intact, all moving averages, and breaking the lower high pattern very clearly. It is really not comparable to where Apple stands right now. There's certainly gains to be made in both when the bulls are showing up in the sector, but there are just some names that are better positioned than others. Facebook on the weekly time frame never lost exponential weekly support. Nice follow through from last week, seeing follow through and closing strong above the upper ball or the exponential resistances, fending off the bearish MACD cross here as well, and Facebook a shining star in terms of the tech sector strength. So the whole tech sector, we have a mix of individual names. Some names have broken bearish, like Netflix and Apple, where they set a lower low on this pattern before the bounce started playing out. We have names like Facebook, which have broken their resistance level already. And then we have names like Google, which are still in this pattern and have not made a clear break yet. They still have higher lows and lower highs. So we're watching them all. We'll keep a tap on things. But as of right now, because of the market strength, the tech sector is doing just fine and recovering well from that all-out dump 2 weeks ago Friday. So I appreciate you watching. Have a great night, and we'll check back in tomorrow.